Alright, cool. So basically, this trade recap for February 23rd, 2026. It's a late trade recap, but just got home, so get straight into it. So, starting out with the 4 hour time frame, I like to just look at what happened on Friday. And essentially, we took out weekly highs. And the weekly high drawn liquidity was the higher resistance drawn liquidity because obviously it was the high of the week, and also because it was in the 4 hour gap. So we took that out on Friday, and then we can see the market opened the first 4 hour candle. We inversed that 4 hour gap over here, and then we created a 4 hour gap of our own, a bearish one, right? And we tapped into the bearish gap, and my condition pretty much was that, okay, if we inverse this 4 hour gap, we're more likely to trade towards previous day highs, and if we reject it, then we're more likely to trade towards previous day lows, right? Then moving on to the 1 hour. So we're going from higher time frames to lower time frames and doing our analysis. This was probably the most insightful time frame for me because I was able to identify the draws in liquidity and label them as high resistance or low resistance. Starting off, we can clearly see, okay, inverse 4 hour gap, create our 4 hour gap of our own. Then Asia session happened. We just consolidated, and reversed from there, kind of going deep into the 4 hour gap and then retracing again. And then at market open, we were around here. So it was a bullish candle. So basically, right off the bat, I identified three main draws on liquidity: London high, London low, Asia low, right? And the thing with London high, I labeled London high as high resistance because one, it's pretty much because it's in the 4 hour gap. So that's why it's high resistance. And if we take out or manipulate this high, we're more likely to reverse and continue or seek draws in liquidity to the downside. And then what I thought Asia low and London low were, I recognize these as low resistance liquidity because they're not. Yeah, obviously this is a reversal, but this reversal does not have a proper foundation. So, and this is a low resistance drawn liquidity because it's not in a high time fair value gap. Thus, this whole reversal is just fake. It's not a proper foundation for us to move higher throughout the day or throughout the week. So that's why I thought this high resistance or low resistance and the London high was high resistance. So basically, I now set another condition in the market. I'm like, okay, cool. When London, what do you call it? When London high or New York session opens, I want to see London high get manipulated. If London high manipulates and we inverse the 4 hour gap, then I'll still look to trade higher towards previous day highs. But if London or New York open manipulates London high and we get a reversal, then we're more likely to trade towards London low and Asia low. And so, yeah, we can look at. Also, shout out PB Blake for teaching me the low resistance, high resistance thing. I watched his videos, and that was like my biggest fault. Anyways, going to the 15 minute didn't really give me much insight because this whole leg between London low and the New York Open, it was just a bunch of chop and low volatility. So there's no gaps on the 1 minute or on the 15 minute or 5 minute either. But market did open, and we did ended up manipulating London high as we strongly anticipated. But what we want to see next is how we react off this manipulation, right? We can either continue or reverse. And so we kind of manipulated London high. NQ took out London high, was moving towards the New York opening gap, which we already tapped into when the when Asia session opened. So I'm not too much worried about the New York opening gap, or the New York opening gap, sorry. But then on ES, we can see we were trading towards previous day highs, and actually wanted us to take out previous day highs on ES and not NQ, so that we can add another confluence to the bag for the trade, and that strengthens our bearish bias, right? So if ES took out previous day highs and NQ didn't, then that'll give us more confirmation of a bearish setup. And so from here, I was obviously looking to take a short for the inversion of the highest time frame for value gap, which was this 5 minute. I don't know if you guys can see, but the market just ended up printing Drake candles, and we just automatically delivered to London low, which is pretty upsetting. But nonetheless, I was still not gonna trade for the day because we obviously had Asian low. So I wanted to see how I react, and I knew most likely we're gonna tap into Asia low, but I want to figure out how we would, right? Because a lot of times you could know where the draw on liquidity is or where the market is gonna go, but another key important part is how we're gonna move towards there. So we formed the 5 minute gap from that huge couple of Drake candles, and we tapped into the 5 minute gap. And I was looking at this 1 minute, fair value gap over here and seeing how we react off of it. Now, ideally, I would have liked to see a clean inversal, just a clean run through the fair value gap, and then that would be my entry. We ended up just chopping around, and to where we eventually inversed it. Now, the reason why I took this trade is because I was looking back at the 4 hour and the 1 hour gap, and I can see, okay, we had a huge rejection off of this manipulation leg, so it's a huge rejection off of that. And B, we're also rejecting the 4 hour gap, so that gave me further confirmation that okay, we are going to go lower into Asia low, and I'm not really scared or too worried about the 10 a.m. open because 10 a.m. open typically either is manipulation leg or it will follow through and move towards the draws on liquidity. And so since we already had our manipulation at New York Open with the London highs, I knew that okay, 10 a.m. would more than likely displace price action lower to Asia lows. And so that's what entered the trade with the 1 minute IFBG setting my stop loss at near the top of the retracement to the 5 minute gap. Obviously, I was kind of dumb into the sense that I didn't put it to the top of it, but so I ended up almost getting stopped out. But the trade ended up semi playing out. I set my break even to the current New York low. Obviously, I could have TP'd there for like a decent 1 to 1.24, but since I had such strong conviction that price will go lower to Asia low, I did ended up just setting that as my break even. So 10 a.m. opened, we almost got stopped out. We finally printed some Drake candles in our favor, and then I set the condition. Okay, since we created the 1 minute gap, so at this point I was at break even, but now I wanted to manage my trade to maximize profits and to minimize loss. So my condition was okay. If we get a retracement in this 1 minute gap, I'll then put my stop loss or my TP to the top of this retracement because that's just a smart thing to do, and we're maximizing profits, right? And it's unlikely that since we tap into the 1 minute gap, we'll re-tap into it, and it's even more unlikely that we'll surpass it. And so that's why I put my TP there. Unfortunately, we got taken out, and then the trade ended up playing out very, very slowly. Yeah, it just ended up playing really slowly. It is a no news Monday, so I'm not really upset about that. The main thing I am happy about is obviously we maximize our profits in this condition, in the market condition, but also getting the draws on liquidity right and where we want to move in the market right. So basically, that's just a really good habit to build. So I'm just setting my daily bias, setting conditions. If the conditions are met, great, continue. If not, then re-strategize or just not even trade in general. So I'm really happy that I was able to identify where high resistance liquidity is and where the low resistance liquidity is and where prices is probable to go because or after we manipulate the high resistance. And yeah, I just think I'm working towards. Um, it's not a full TP, but you know, a win's a win, and it's about the process, not about the money. So that's a good thing. As long as I'm getting these trades consistent or getting the bias consistent and understanding, okay, where price wants to go and how we're gonna go there. I feel like if I get better at that, I can become a better trader. And yeah, that pretty much sums up the trade recap for today. Not much else to say. But yeah.